Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Howard Hughes Holdings Inc. Annual Report. Howard Hughes Holdings Inc. offers a diverse range of businesses and services through its three main segments: operating assets, MPC, and strategic developments. The operating assets segment focuses on acquiring or developing various types of properties, including retail, office, and multifamily spaces, as well as investing in other real estate ventures. This segment caters to the needs of individuals and businesses seeking commercial and residential spaces. In contrast, the MPC segment is dedicated to large-scale community development projects, specifically targeting areas around Las Vegas, Houston, and Phoenix. The company develops and sells land to home builders and developers for long-term community projects. The strategic development segment takes a more specialized approach by developing residential condominiums and commercial properties, as well as other types of projects. This segment allows the company to diversify its offerings and cater to specific market demands. Overall, Howard Hughes Holdings Inc.'s business operations encompass a wide range of services, from property development and investment to community building and project management. Die Stagnation des Aktienkurses von Howard Hughes Holdings Inc. I am Vergingen Jar kan auf mehrer Nachrichteneranes zurückgeführt worden, die jedoch kein signifikanten Währendrungen des Aktienkurses mehr als 335% verursachten. Eins der Iranes war die Investition von Pershing Square, in Höhe von 900 Millionen US-Dollar, durch den Erwerb new ausgegebener Aktien, zu einem Aufschlag von 48%. Obwohl dies ein erheblich Sum darstellt, führt es nur zu einer geringen Veränderung des Aktienkurses 1%. Ein weiteres Iranes war der Bericht über die Ergebnis des ersten Quartals 2025. Auch wenn die Erwartungen der Analysten für den Juen pro Aktie und den Umsatz verfehlt wurden, stieg der Aktienkurs nachbörslich 242%. Die Vereinbarung zur Übernahme der Vantage Group Holdings führt ebenfalls zu einer Veränderung des Aktienkurses 227%. Dies Veränderungen lagen jedoch alle innerhalb der festgelegten Schwelle von 335%. Einzig der Bericht über die Ergebnis des vierten Quartals und des Gesamtjahres 2025 führt zu einer signifikanten Veränderung des Aktienkurses 7%. Dieses Iranes erfüllt jedoch nicht die Kriterien der Benutzeranfrage. Howard Hughes Holdings Inc. market capitalization of $4 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Howard Hughes Holdings Inc. holds a significant advantage in their industry. Howard Hughes Holdings Inc. trades at a higher price-to-earnings ratio of 14 times and a higher price-to-book ratio of 1.18 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 69% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count while revenue has grown, but declining assets and equity suggest buybacks may be taking precedence over reinvestment. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline in the given summary can be identified through a review of key financial metrics. One notable driver is development expenditures, which saw an increase of 18% between 2023 and 2024. This suggests that investments in development activities contributed to revenue growth. In terms of specific revenue streams, condominium rights and unit sales experienced a decline in 2025 compared to the previous year. However, master-planned communities' land sales showed significant growth, increasing by over $100,000 from 2024 to 2025. Rental revenue also demonstrated growth, with an increase of nearly $20,000 between 2024 and 2025. These findings indicate that while some revenue streams experienced decline or stagnation, others continued to grow, driven by investments in development and sales of master plan communities' land. The financial performance of a company underwent significant changes between 2024 and 2025, as reflected in its net income and profit margins. In 2024, the company's net income was $196,992, but it decreased by $73,149 to $123,843 in 2025. This decline in net income is attributed to a decrease in profit margins. The profit margin also experienced a significant drop from 31.9% in 2024 to 22.4% in 2025, representing a decrease of 9.5 percentage points. This substantial decline in profit margins suggests that the company's revenue growth was not sufficient to offset increased costs or expenses, leading to reduced profitability. The company's debt level and interest expenses have undergone significant changes over the past year. Notably, total liabilities have risen by $1.4 billion, increasing from $9.2 billion at the end of 2024 to $10.6 billion at the end of 2025. This substantial increase in debt suggests that the company has taken on more financial obligations. Furthermore, interest expenses have also seen a notable rise, increasing from -$164,926 in 2024 to -$169,931 in 2025. Although this may seem like a small change, it represents an actual increase of $5,005 in interest expenses over the past year. This uptick in interest expenses is likely due to the increased debt level and may have significant implications for the company's financial health. The company's performance across various segments has been mixed in 2025 compared to the previous year. On a positive note, residential and commercial land sales closed have seen significant growth, with a notable increase of $111.32 million from 2024 to 2025. Additionally, MPC net contribution has also increased by $16.8 million due to higher MPC land sales. However, some segments have underperformed. Net new home sales have declined by 298 units in 2025 compared to the previous year, indicating a decrease in demand for new homes. Furthermore, operating assets have seen a significant drop in capital expenditures from $45,333 in 2024 to $45,333 in 2025. Segments such as master plan communities and strategic developments have shown mixed performance. While MPC land inventory balance has increased, the segment's capital expenditures have decreased. In contrast, strategic developments have seen an increase in capital expenditures, but a decrease in total assets. Management's outlook and strategy: the company is optimistic about its future prospects, as evident from its various ongoing and future projects aimed at redevelopment, new construction, and land acquisition. The significant increase in total residential land sales closed for 2025, up by $111 million from the previous year, indicates a positive outlook for the company's revenue growth. However, there is also a decrease in net new home sales, down to 1,936 units in 2025 compared to 2,234 units in 2024. This may be a cause of concern for management, but it does not seem to have impacted the overall financial performance of the company. In fact, the company reported a net income of $1.2 billion for the year ended December 31, 2025, and a revenue increase by 15% to $4.8 billion in 2025 compared to $4.2 billion in 2024. Management is also taking proactive steps to manage risks associated with interest rates and foreign exchange rates through derivative contracts. Additionally, the company has diversified its operations across 3 segments: operating assets, master plan communities, and strategic developments. Overall, management's outlook for the company appears positive, with a focus on growth and risk management. Acquisitions and divestitures overview: the analysis reveals limited information on acquisitions. There are no explicit mentions of any significant acquisitions in the summaries provided. On the other hand, there is evidence to suggest a potential divestiture. According to page 16, a guarantee was released for SEG's outstanding mortgage related to its 250 Water Street property after the company repaid the loan in full. This implies that HHH, Howard Hughes Holdings Inc., no longer has any obligations or liabilities associated with this property. However, it is essential to note that there is no clear indication of a sale or transfer of ownership. Therefore, it remains uncertain whether this was indeed a divestiture or simply a repayment of debt. The company's financial activities over the past year have been documented in various summaries. One notable activity mentioned is the share repurchases made by the company during the fourth quarter of 2025. According to the records, a significant number of shares were purchased during this period. However, there is no mention of dividend payments in any of the summaries provided. This suggests that the company has not distributed any dividends to its shareholders over the same period. In conclusion, while the company has engaged in share buybacks, it appears to have prioritized other financial activities over paying dividends to its investors. That concludes the financial summary for Howard Hughes Holdings Inc. Feel free to comment below, and I will be happy to answer them when possible.